So what's up guys, nagbabalik Princemharky and welcome back again to my YouTube channel. So for today's video guys, we are now discussing about licensing and insurance about the agricultural commodity system in the Philippines. So we are now discussing about the crop insurance in the Philippines and the other countries. So using this picture and some of the topics we discuss in this vlog. So as you see, PCIC has been the only provider of crop insurance in the Philippines for more than 3 decades or 30 years. Government and financial institution subsidies 60% to 70% of the premium for the main crop, rice and corn under an all-risk product. Government provided premium subsidy of 2 billion or around 49 million US dollar in 2013 prices. Majority of the PCIC insurance policies are inked with the capture loan for the rice crop from State Bank, Land Bank of the Philippines. In 2012 to 2015, the remote sensing-based information and insurance of the for crops and emerging economics was implemented in the Philippines with the Insurance Commission, the Department of Agriculture, the Philippine Insurers and Reinsurers Association, and private insurer. An agricultural microinsurance policy framework was issued by Insurance Commission as a circular letter 2015-53 in October 2015. Microagri defined the types of insurance produced as the targets, sectors, and stakeholder and data required. So next is the crop insurance in the Philippines. So we've seen in this data, in terms of performance, PCIC registered an average damage rate of only 0.54% and a loss of ratio of 0.12% for all crops in 2014 to 2015. Highest damage was with rice at 6.63% in 2015 with a loss ratio of 0.53% due to typhoon in the El Nino phenomenon. The lowest damage rate and loss ratio product of PCIC is not on crop but a term insurance package for farmers with 0.05% damage rate and 0.19% loss ratio. And 2014 to 2015 were good years for PCIC. So next is the crop insurance status in the Philippines. This is in line with the last graph. So for the period of 2007 to 2014, the highest damage rate was in 2011 with 10.30% due to flood from excess rainfall and typhoons. At the same time, drought also affected rice and corn farming in the same years. And next is the problems encountered in rice farming in the Philippines. So, however, in the survey on problems encountered by rice farmers in the Pillar Rice in 2014, high price of agricultural input was seen as the most significant, followed by the pest and diseases and low price of rice. One significant characteristic of the farmer's response is the lacking perception on problems with weather risk. Polarized shared that it was not part of the option, even then granting that farmers place extreme weather events under others, and it is 6 times lesser than the high price of input despite an average 20 typhoons hitting the Philippines. So next is the crop insurance status from other countries. We are not discussing about the other countries from Vietnam and Thailand. So in Vietnam, the loss ratio is on average of 27.89% of premium for Bauvet and Baumint, which is a little over 5 times more of PCIC's loss ratio at 4.89% for the same year. Loss ratio and are even higher in Thailand with 554% in 2011, significantly higher than the Philippines and Vietnam. Among the three countries compared for the same year 2012, it can be theorized that the highest crop insurance product value in rice could be attributed to Thailand, but with terminal financial effects for the insurer for calendar year 2012, while the most financially viable is the PCIC product with the lowest loss ratios among three countries. So, in October 2015, the insurance commission released circular letter number 2015 to 53, or the agricultural microinsurance policy frameworks defining the types of insurance products based on the output of a DOF-led technical working group on agriculture insurance for indemnity based on index-based product. In the same framework, an area-led index insurance was identified as a means to determine the insurance payout, while the trigger is weather-based. This policy ensured that reduction in yield are weather-related and are thus based on contingent event. The number 2, crop insurance in the Philippines is driven primarily by PCIC products for non-life and life or term and life insurance package for farmers. The Insurance Commission has licensed index insurance product rice and banana. While weather index insurance pilot tests are ongoing, the PCIC or the UNDP and the World Bank for rice and corn. Rice Computer simulated an area-based yield index insurance product in 2014 prior to release of the micro-agri policy framework. So from this experience, the need to constantly share the data and design those that are useful for insurance purposes was highlighted. Based on the rice product simulation, the Department of Agriculture emphasized the need of the data sharing protocol to manage the data access on a municipal level area lead for rice available for all rice producing municipalities in the Philippines since 2014. So incoming private agro-insurance product cannot compete with the 60% to the 70% subsidies premium by government. The value added is on complementing PCIC's reach of 10% of farmers with less than 7 hectares of rice. However, the features of speed in determining payouts, for example, provided by index-based insurance product can be used to make a strong case of index products, particularly for widespread damage due to natural catastrophes. So, a formal private strategy that includes specific targets is needed among relevant externals to drive micro agri framework. Along these lines, knowing the drivers for crop insurance uptake is crucial. Products have been proven more attractive for farmers when bundled with agro inputs like fertilizer, all the rest and standard product features such as capacity to pay, use for technology, distribution, or consumers access point. Uh, so, use of independent technology, distribution, and consumer touch points. So next is a separate allocation for smart subsidies on top of premium can be provided by government to the Department of Agriculture for farmers training. The Statistic Authority for data collection for insurance and the regulator for financial literacy training. The knowledge exchange and continuous monitoring can be facilitated by the Mutual Exchange Forum on Exclusive Insurance Network or MIFIN. So that is the topic we discussed on this vlog. So I hope that you learn or gain knowledge from this video about the crops insurance or the agricultural commodity systems regarding the licensing and insurance in the crop uh, status in the Philippines. So if you like this video and if you did, just do like, comment, share, and subscribe to our channel. So that is for today's video. Hope you gain knowledge for it.